So who, by the way, I just need to know who's in the room. Who knows nothing about crypto? Okay, a few. Okay, good. So what on-chain analysis is for crypto is basically you can see everything on the blockchain pretty much. So for example, let's take Apple, one of the biggest companies around, it's listed. People think, oh, it's a transparent company. Wrong. All you see are the quarterly reports of Apple. That's it. You have no idea what they're doing with their cash. Most people don't know it's got 1,500 car engineers and has done for the last 7 years. They've been trying to make an autonomous car. Like you can't see, with companies, you can't see what cash they have, where they're putting it, yada, yada, yada. But with crypto, you can see everything. Let's take Bitcoin, for example. You can see every single transaction that's happening on the chain. Hence, it's called on-chain analytics. And because it's so transparent, there are thousands of different indicators you can look at. Now, being an investor, I always maintain the 80-20 principle. So I skim out a whole bunch of the rubbish stuff and then just focus on the 20% of the stuff that gives you 80% of the results. So what I'm going to go through are a quick roundup of some of the on-chain analytics that I look at, which give us some really, really interesting medium to long-term views. So that's the key thing here. There will be short-term bubble, noise and movement, but on-chain is really for mid to long-term stuff. It gives you really good buy, like lows and highs. So first of all, let's start with a really basic one, Bitcoin. All of this is about Bitcoin, by the way, because Bitcoin is the market. It's a tech, right? So all of Bitcoin's main value is network effect. The reason why Facebook is so valuable is because it's got 2 billion monthly active users. That's the sole value of Facebook. It's user base. So therefore, Metcalfe's law is in effect here. So Bitcoin is a network. So one of the things I look at is the number of addresses with a non-zero balance. So despite all of the crap going on, look what's happened. Bitcoin is still growing from a grassroots perspective. So this is perfect. This is exactly what you want to see. So it's definitely not going to die. It's still growing. Number of new addresses, if I could hover my mouse, it's roughly 400,000 new wallets every single day being created. Now, it doesn't mean 400,000 new people a day, but if you divide it by 4, that's probably a rough, not a bad shout. So if it's 400,000, that means there's roughly 100,000 people a day joining crypto for the very first time. Crazy. This is entity-adjusted dormancy flow. So this is looking at the realized market cap of Bitcoin compared to the amount of activity or on-chain. So this really goes into coin days destroyed, which is a bit different. Long story short, the way to read this chart, if I get my little laser out here, is this orange line is showing you how much movement there is. So how if you take a lot of the older coins, so if you've bought a coin back in the day, like years ago, you'll have what's called a lot more coin days accumulated. Long story short, this just means that people are not running away. So people are buying and hodling. They're literally buying and staying, keeping it. So people that have been in for sort of a year plus tend to stay and hold. But basically, people under a year, they're coming in and out. But entity adjacency dormancy flow is rock level bottoms. So this basically shows you that, I mean, we're the lowest it's ever been, really. It shows you that people are battening down the hatches and they're just waiting for the pump. So that's interesting. Realized price, I think, is the best low indicator out there. Of all the on-chain analytics, it's probably the best. So you have realized price, which is this orange band. And then this chart, I won't show you how realized price is calculated, but it's what's referred to as the proper base of Bitcoin. So it accounts for all sorts of stuff. But long story short, when this black line here is the price of Bitcoin. Every single time the price of Bitcoin has dipped below the realized price of Bitcoin, that has shown mass capitulation and the best buying opportunities ever. Every single time Bitcoin has dropped below realized price, look what's happened to the price. Over here, dropped below it, and then we had a massive bull market afterwards. Over here, dropped below it, massive bull market. And look, this is a log scale, it's not linear. So over here, we had prices around sort of $100, $200, so $300 Yeah, I know the price back in 2015. It was about $300. It was under realized price for a few months, or about half a year, sorry, and then it rallied all the way up to about 12K. Like here, it was in the dollars, and then it rallied all the way up to about $500. Again, here in 2019, it went below realized price. It was around $3,000 here, and then it went up to 69K. And what's happening right now? We have literally just dipped below realized price. This is golden information here. Now, what you have to understand with a realized price dip is that you will have volatility around it. So just because it's dipped below realized price doesn't mean it's going to go just up from now. It could very well go further down. Like here, we had a rather large insertion. That's not the right word. A rather large dip into realized price or below realized price. So this could go further. So we're hovering around 20K. There's nothing saying Bitcoin can't go to 15K or 10K. But if it does that, it'll be transitory. That funny word again. It'll be, shortly lived. So this is why, although I'm dicking around in and out of the market, I always do temper all of this with saying, look, if you're going to be really passive, like buying now is like going to be a generational buying opportunity. So be happy buying in at 20K. Even if it dips to 10K, it'll be short-lived. So this is probably one of my favorites in terms of bottoms. Realized HODL ratio, this is another good one for bottoms. So what this one is basically showing, when it gets into the green, you buy. When it gets into the red, you sell. And it's one of the, again, like the realized price, it's one of the most accurate indicators out there. This particular one is saying that we've got a little bit more falling to go. But yeah, it's still good. Again, technical analysis does work with these charts as well. So you could draw a base support level going across here, and you'll see that actually the HODL ratio is actually sat on big base support, literally right now. So what's quite likely to happen is that we could see a bit of a bounce off here. I mean, look, what is this? This is a double top. Technical analysis works on any chart. And one, I was short of data actually, but what I wanted to plot was that you could plot anything on a chart and technical analysis will work. You could plot rainfall in Norwich and technical analysis and chart patterns would still apply. One thing I'll probably do over lunch is I play Age of Empires every night. You probably don't know that. And my rating on AOE has rocketed recently because I've tried a new tactic. But all the same chart patterns apply to my ELO, which is crazy. It bounces off support, bounces off resistance. Yeah, it's quite interesting. Here's NUPL, so net unrealized profit and loss. Basically, what it's saying is that most people are in the fear stages right now. We just entered the red. But here's the thing with NUPL, or NUPL as you want to call it, when you enter the red, you always go quite far into it. So it's literally just teasing the red at the moment. So I'm waiting for that last, what I call the crypto colonic. We've got one more flush out of all the crap that there is in the market. We need more bankruptcies. The founders of 3AC have disappeared, by the way. So 3 Arrows Capital, the big, was it $6 billion that they've lost? They've done a runner. No one can find the founders. So we need more of that, more bollocks, just to be flushed out. So I'm still banking on one last push down. We need that one last capitulation spike, and then we can sort of fill our boots. Net exchange balance. So this is showing you the amount of Bitcoin flowing from and to the exchanges. So for the newer people here, when there's a big sell-off about to happen, Bitcoin goes from private wallets to the exchanges, because that's where you sell. You sell it on the exchange. And before big rallies, you take it from the exchange into your own wallets. So all the green stuff here shows Bitcoin flowing to the exchanges, big influx of Bitcoin to the exchanges just before the dump. And all the red stuff is Bitcoin flowing away from the exchanges. So when you see big red, you tend to see big rallies. So here, huge amounts. So this is actually a daily chart. So if you really zoomed in, there's lots of individual bars there. But what we're seeing right now is probably the most amount of Bitcoin flowing out of exchanges that we've ever seen, to the tune of between 120,000 to 160,000 Bitcoin per day flowing out of exchanges. That's vast, and it's sharp. and deep. So what we want to see is a bit more of a sort of a bit more girth. That's probably the best word for this red thing here. And then I think we're off to the races. And then the SSR oscillator. Again, today is not the time to teach you exactly what it all means. I just want to show you how to interpolate or read it. So this basically shows you the amount of dry powder on the sidelines, the amount of stable coins and currency out there waiting on, to get plow back in. And when you see this -2 level, I've drawn a big green line, whenever the SSR dips below it and then corrects back up, then you see a spike in the price. So the black stuff here is the price of Bitcoin, yellow, orange is the SSR oscillator. So I've highlighted here, every single time the market has spiked below the -2 level and then corrected back up, price has then followed. This one here looks a bit dodge, but it still goes from 30K to 45K. There was a nice rally there. And what we're seeing right now is a dip below the -2 level, and a correction. So is this the beginning of another correction back to 40, 50K? Who knows? But every Thursday I do the trading pubs, as you know, and there was a time where, I was like, trading, there's nothing to talk about with on-chain. It's all saying the same thing. And it's only recently on-chain stuff has pivoted. For a long time, it's been in limbo land. It wasn't a buy or a sell signal. Now, pretty much every on-chain metric is shouting, freaking buy crypto, which is interesting. Again, don't get me wrong, it could dip a little bit lower, but from a wider sense, everything is screaming buy now. And when you look at the biggest Bitcoin wallets in the world, they are buying. They're accumulating right now. There's one, I think it's the biggest private Bitcoin wallet is buying something like 1,000 Bitcoin a day at the moment, which is just nuts. So what does this multi-billionaire know that we don't? I know it's lazy to think, oh, yeah, I'm just going to follow the billionaires because they have better data, better information than us, and they're cleverer and they're richer than us, so I'm just going to copy what they do. Sometimes that is a wise move. Sometimes it isn't. So you've got to be careful who you follow. Like if you listen to what Warren Buffett says, then you'd be poor. But if you do what Warren Buffett does, you'd be rich. So you've got to be careful. You've got to do what billionaires do, not what they say. So yeah, the fact that there's whales galore just hoovering up Bitcoin at the 20K level, makes me think, shit, what am I missing out here? Am I being foolish holding out for 15K Bitcoin or 16K Bitcoin? Do I pound cost average in? So these questions are constantly flowing through my head, which is why I'm always saying to those who want to be more passive, just chill out, just buy now and have a 3 to 5 year outlook, and then you'll be golden. The Mayer multiple, so this is, I quite like this. So everyone in the industry is obsessed with the 200 moving average, which is this red line here. It basically takes the average price of the last 200 days and plots a line. Really simple. And the Mayer multiple literally just shows you mass deviation from the 200 moving average. So here, if you look up here in the 2018 peak, it was massively out of kilt from, if you draw a straight line down, it was like as far away as it could be from the 200 EMA. And therefore, that deviation is shown down here on this level over here. And so it's a massive sell signal. Well, guess what? We are massively deviated to the downside in terms of the Mayer multiple bands. And we are in the strong buy signal. We don't get this often, folks. Pretty much every 3 years or so, we'll have some sort of buy signal like this. And it tends to be cycle lows that we get this Mayer multiple sign. And I mean, hell, that's one hell of a buy signal there, if you ask me. Because you have to understand, the reason I like this is because markets are, there's an amount of reflexivity in markets. And so any overextension always gets corrected. You have to always imagine that there's rubber bands holding price. And if the market goes too far in one way, the invisible rubber band will yank it back to it's mean reversion at the end of the day. So that's what the Mayer multiple is. It's that big rubber band showing right now. That rubber band is max tautness. So mean reversion should occur. And by the way, mean reversion will bring this back to sort of 50K. We have the magic lines. I don't really like magic lines. All people have done is just used a different bunch of moving averages and they've done curve fitting. They've gone, okay, which moving average looks best? The one which I guess is relevant is the 200 weekly moving average. That's what everyone looks at, and we're below it. Nothing fancy here. The Puell multiple, this is more about the miners at the moment, because you have to understand miners are actually, although they're positive they're positive for the whole network as a whole, they are always a constant source of sell pressure as well. If you're a massive miner and you've got $1 billion worth of mining rigs in Iceland somewhere, let's say, you have a massive OPEX. You've probably got a team of 50 to 100 staff maintaining the rigs. You've got all sorts of different costs. And so what do you have to do? Like, let's say you have an OPEX, monthly outgoings of, I don't know, $500,000 a month. Where are you going to get that revenue from? You have to sell some Bitcoin to cover your overheads, right? So all of the big miners in the world, they are constantly mining the Bitcoin, which is good for the network, but they have to also sell a small chunk of that Bitcoin just to pay the rent, pay the bills, pay salaries and stuff like that. So they're a constant sell pressure as well. So when prices are really low, in order to maintain their overheads, they either cut back on their overheads or they just sell more Bitcoin. So it's like it can turn into a negative feedback loop sometimes. And the Puell multiple sort of shows that. So right now, we're in mass stress for the miners, so to speak. Again, another cracking buy signal. This is another sort of curve fit type thing, a whole bunch of different metrics. Long story short, this purple line has caught every cycle bottom that Bitcoin's ever had. What is it? I forgot what it. I actually forgot how they calculate this, to be honest. But long story short, this purple line right now is sitting at 15.6K. So $15,600. That's where that purple line is sat right now. And the top, which has caught every high of every cycle, that's currently sat at 300K right now. So remember, this is a logarithmic chart, not linear. So hence, up here is 300K, down here is 15.6. Again, if you look at this from the bigger picture, you're like, holy shit, I'm not a trader, I'm just going to buy now. Everything's saying buy, screw it. 3-5 year outlook, job's a good one. This isn't really an on-chain thing. For me, this is comedy. I have funny tastes, obviously. The reason it's so funny is because this is how many Satoshis per dollar. So basically, this is the dollar purchasing power against Bitcoin. So long story short, the dollar is crashing against Bitcoin, crashing. In just 10 years, it's lost like 100% almost in terms of purchasing power. For me, this is absolutely comical. You could draw a base resistance line along here, and look, this short-term dollar strength, transitory. It's going to be short-lived. So that's sort of the on-chain stuff. Long story short, frickin' buy and hold and forget. That's like the easiest thing you can do. If you're not a trader and you want a nice 5-year play or more, just buy the nice big ones. Bitcoin, Ether, and you can't go wrong. In my opinion, not financial advice. Don't come to me if you lose all your money. So the next one is crypto market cap. So this is the market capitalization of all cryptos. Bitcoin, Ether, shitcoins galore. And what we're seeing is, so this is the linear chart, not log. You'll see that if you connect the highs, it's, oh, damn it, I should have scrolled down a little bit. But it's funny that this resistance connects the highs. Interesting. And then you can draw some base support. Now, we've got two base supports. We have the base support, which is the previous market cap back into 2018, which was just, I think it was about $800 billion, something like that. And then we got the angular base support over here. So right now, the market is fanning around those two base support levels. Here's my word of caution. If total market cap breaches these two support levels, there's nothing stopping global market cap dropping to about 400 billion. Nothing. There's no real support around here. So it could get, so this is my one caution. If these two support levels get broken and we drop and we dip and stay below $800 billion for, let's say, a week, game over. Not game over, it's the clonic, which I'm expecting. And we should see basically a halving of global crypto market cap. That's Bitcoin at $10,000, basically. So could be scary, but there's a big confluence of support here. We could just as well fanning around here for a bit and start a nice casual base before moving up. We do not want to see V reversals in price. V reversals in price are short-lived. What we want to see is a nice base. So here we had the 2018 collapse. We hit like $3,600-ish. We then had basically 6 months of bottoming out. And that created a nice strong base for 69K. 3.5K to 69K. Even at like a 6-month base. So that's yeah, so for me, my eyes are in 2023 really. I've written off 2022 in terms of making mad stacks. 2023, I think we're going to start to see a lot of the crypto sentiment change. Everyone's scared of war and stuff right now. 2023 is where the money's at, in my opinion. So that's just all the on-chain stuff. Now I want to, so quick segue, let's talk about shitcoins. Because of my, I guess, position, it's not really much of a position, because I've got some sort of small following base, I get inundated with random people messaging me. And not just random people, just anyone that really knows me. You know, because people get into crypto at different times. And they go, oh, I know Siam, he's been in crypto forever. I'm going to, and you know, they'll cotton on to the next cult or the next shitcoin or scam. And it will always start off with a text message like this, always. Hey mate, long time no see. Hope crypto's still going well for you. Came across this the other day, insert any old shitcoin, which I've just put a lot of money into. What are your thoughts? So this person, and this average text, they don't want to hear my thoughts. They just want some backup. All they're looking for is, have I done the right thing? What they're really fishing for is, oh, great move, mate. You're really clever. You've definitely put all your money in the right basket, which is nearly never the case, by the way. It's normally Ripple or some sort of shit DAO. Sorry, I'm not a fan of Ripple. So what I then do is just a very bog standard due diligence. And the way that my who's calling me? Is this the FCA? No, sorry. So I've sort of honed in my due diligence, and I can do a relatively deep DD in the space of like 4 minutes, less than that. And like in a few minutes, I can quickly tell you if it's a shitcoin or not. And I'm going to share with you my 3-4 minute DD. So first of all, I go, first of all, I have to make an apology. Big fan of admitting when you're wrong or when you've done something bad or wrong. So in one of the previous trading pubs, I had one of these texts recently. And in a trading pub, I absolutely roasted a coin, which I said was a shitcoin. And to be fair, it was a shitcoin. But just because something is a shitcoin doesn't mean it's scammy. There is a difference. You can have a genuine shitcoin and a scammy coin. And a lot of the time, being honest, most shitcoins are just people just trying to set up a crypto project, but they haven't had any business experience or they just haven't launched it properly. And it just hasn't taken off, and hence it's a shitcoin. But there was never any wrongdoing involved. Does that make sense? And I apologize because the owner of that shitcoin is in this room today. So I do really apologize. I didn't mean to tear it to bits that much. But everything I say and do is from a teaching, learning point of view, if that makes sense. And so I'm really trying to I distinguish the difference between scammy and just a failed project. And hands up, if I launched a crypto project myself today, it would flop and do shit. So, and I'm fully aware of that. Like the key thing you need to understand is that when you're launching a crypto project, especially in these days, unless you're hitting $100 million market cap like this, you will not work. You will not win. I guarantee you, if you're not hitting the ground with $100 million of market cap in your opening week, you're not going to win. Even if it's the best idea ever, the best project, the best whatever, you're massively underfunded. Also, if you're not launching with a team of about 10 people, 10 hardcore coders and tokenomics experts and the whole team, you're not going to win. It could be the best damn project, the best code ever. It will just not work. This is why I have not even bothered trying to set up a project. So this then leads you to the next thing is like, okay, if I need $100 million market cap from day one with a shit hot team and I need to get the marketing perfect to get all the users on board, like this is no different than running a normal business. So then I ask myself, have I ever run a $100 million business before? No. Am I going to run a $100 million business in the next couple of years? Most likely not. Do I have the skills to do that? I've got some of the skills, I haven't got all of them. So you just got to be really honest with yourself. And so, yeah, you really need to hit the ground running. So what I've done for this thing, I've picked a random shitcoin. I've covered the name, so you will not know what I'm talking about. But I just want to show you my due diligence. So does my apology make sense, first of all? Yeah? And I'm sorry for the person. I didn't mean to cause any harm. So first thing I do, I look up the random shitcoin on CoinMarketCap or CoinGecko, whatever, just to see where it sits on the whole standing. And I just want to, get a feel for it. So first of all, I'm looking at, okay, where is it? So 4,000, so on page, God knows, like 450 or whatever. It's got no market cap, so it says fully diluted market cap. So it's basically saying if all of the coins were liquid and whatever, it would have this market cap. But you ignore that, that's bollocks. This is the one you look at. Okay, 5.6 million. That's not too bad, but that could still be hiding a few things. Like if one coin was in circulation, and so market cap is really one of the key variables is liquidity. So as in how much money is sloshing around and how much of the circulating supply is there. So if there's, $1 million circulating in the ecosystem, but only one coin circulating, technically it's $1 million per coin, and then you look at the total market, how many coins there are. So it's misleading. But first of all, I'm not interested in a project unless it's $100 million minimum. Or a way that you can sort of, because that arbitrary number thing will change. So for me, I really, unless it's on page 5 of CoinMarketCap or above, I'm not interested. So what is page 5? I don't know. You probably need several hundreds of million. I don't know. But for me, I think it's a good indicator, a good gauge, a yardstick, so to speak. Because in the future, $100 million will be nothing, maybe. If the whole market cap is $20 trillion, $100 million will be nothing. So yeah, page 5 or up. If it's below page 5, I mean, when was the last time you clicked on a link on page 6 of Google search? Nah, never. Next thing is volume. So 24-hour volume. No one is playing with this. 30K a day? Nah, nothing. Self-reported circulating supply. Yeah, most of this is rubbish. All I want to see is what has the chart actually done from the day of birth. It launched and has gone down. Interesting. I then go and look at the website, if you can find the website. Most of the time, you cannot find the website for love nor money at all. No Google search, nothing. It just doesn't exist. Most of the time, if you scroll down this page, it will show you what the website is. Or you can click on the website there or read the white paper. If it doesn't have a white paper, and a proper white paper, that's alarm bell straight away. You can tell, when you've read enough white papers, you know the difference between one that's been Control-C and Control-V'd, and one that has actually put some genuine thought into it. Most projects are copy and paste. But yeah, check the website, and you'll get the idea if it's, most of these are built by marketers, really. It's lots of, discount here, discount there, blah, blah, blah. I can't really give you real metrics on the website, but you will get a feeling, is this a genuine website or is this a cash grab? You just got to be aware of the cash grab. Then check the social media. So if it's promising, game-changing thing, I'm going to cure world hunger, blah, 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 but it's got like 4 followers on Twitter and has no Discord community or anything like that, it's got no traction. But even if I go into their Twitter account and it's got 100,000 followers, I will click randomly on, say, 50 of those followers. If those random people I click on have only just been launched in the last couple of months, guess what? It's a spam bot. People pay, bot centers in India and Calcutta to go, hey, I'll pay you $10,000 for 100,000, Twitter followers. And they will go and spam out the accounts and then follow you. And they're fake. And then some of them, depending how much you spend on the bot centers, will do fake engagement and stuff like that. But you'll see they all say the same stuff. It depends how lazy the bot spammer center that you're paying. So do check social media. You do need a big following, unfortunately. Remember, this is just like launching another business. Just because it's a crypto business doesn't change anything. Then skim through the white paper. Sometimes they try and bamboozle you with maths and equations. That's actually a red flag in my opinion, because they're trying to obfuscate stuff and trying to mislead you with stuff that you're not even going to bother checking. And a good white paper is normally about 8 pages long, I've found. You can get shorter ones, but on this particular one I saw was like half a page. I was like, okay, this is like a 5-minute job. Copy and paste and just change the name. Then I go to Deck Screener, because then you get some candle bar charts like this, candlestick charts. And here it shows you some other things. So this is the same coin, by the way. So it launched, it did its pump, and now it's mid-dump. And that is nearly a cash grab. They'll drum up all of this interest. They launch, because everyone's got on the, the whitelist or whatever. And that's just exit liquidity for the founders. They'll be like, hey, loads of people on board. And the founders are just dumping their lot onto the people that are on the whitelist. And so this is terminal. And then you'll see, the amount of volume on it per day, etc. So this market cap is actually a lot lower than what was on the previous listing. And then on Deck Screener, if you click this bit here where it says More, and just scroll down the page a bit, it'll open up these. These are free tools that will just give you a really quick idiot check. Stay Safe, SAFU, Token Sniffer, Honeypot, etc. And you click them, and it'll take the token address. So here's the token address, and it'll pop them into these tokens. You just click it, and it'll give you a little report. So this is Token Sniffer, which is, I think, pretty cool. So this one was flagged due to evidence of a bug, hack, or scam, hidden mint functionality. So what this basically means is that the founder has basically put in a secret backdoor that they can just print as many coins as they want willy-nilly. Not good. You don't want that. And yeah, smell test, 0 out of 100. It's literally the worst coin you could probably come up with. And if you scroll down the list, it will tell you where it's fallen through. So yeah, so just go through all of these, just find any coin and you can go through them. Most good, and by the way, just another disclaimer, some good coins will actually still come off pretty bad on here, believe it or not. You can get some well-known coins that are only doing 50 out of 100. Yeah, sometimes it's bad, sometimes it's, I don't know. But these are really simple. You can do all of this literally in minutes, then do your normal Googling. You should be able to find it on page 1. It should be being picked up by other websites, other reporters, other, cointelegraph.com or whatever, stuff like that. So that is a quick DD.